Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Question was interesting to see the deficit, current account deficits on the natural resource countries. Let me go back to the chart so you can see that. And will that turn around? You see the current, which is something interesting about the Australian dollar. Australia continues to run, and had always run, a pretty high current account deficit. And when people were complaining about the U.S. running a high current account deficit, and that being a reason for the fall in currency, we would always say, look at Australia. Its currency is doing pretty well with a high current account deficit. It seems to be very much a factor, and especially some the Western nations, if you look at that, other than Germany. But no doubt, as we see a rebound in global demand, in a increase in the power of the emerging markets in the world, we think the current account deficits will continue to fall across the commodity currencies of the world as that transition hikes up. So yes, I guess is the answer. As to precise numbers, I just really can't give that to you. Can't really make a guess. The fact is, I think if you see demand return in the world, if the world muddles through and global liquidity is there, we think the natural resource currencies will do just fine, because it means China is still on track and the secular upswing in China is still intact. And even in a cyclical move, we'll see the commodity currencies get hammered very, very hard. If you go look at when the credit crunch hit and China's exports fell off the cliff, when U.S. demand soared and we saw that big improvement in the U.S. current account deficit, the currencies of the commodity currencies in the world got hit the hardest. And that will happen again on a major global conflagration in here. One of the things we're watching here is especially the euro in here, being short the euro, based on what's happening here, potentially getting short the euro on a longer term basis. We're actually short in our managed accounts. We'll see the commodity currencies move with that if it's systemic risk coming out of Europe, because the systemic risk coming out of Europe rolls in to the global economy. Money starts to be pulled out of risky assets, and when money's pulled out of risky assets, just by virtue of the correlations that have been very, very tight, it hits the commodity currencies the hardest. So if any one of those risk factors that we talked about, those three risk factors, really start to play out again in the markets, and you see it through the stock market correlations, you pull the commodity currencies up against any of the major stock markets in the world. The stock markets in the world represent risk assets. Commodity currencies are running on risk appetite. So if the stock markets of the world get hit, the commodity currency are going to get hit very, very hard. But we think it's near term. We think it's a shorter term event. And if they do get hit hard, and there is some consolidation, it's just another buying opportunity, because even a cyclical event we don't think is going to change the demand factor for China on a longer term basis. Do you think the Bank of Japan may intervene? Is it a possibility? We definitely think it's a possibility, but we don't think it's going to be anything. There has to be a fundamental change of capital flow to have a lasting impact on intervention. We saw the Swiss bank come in and intervene in a very big way. Swiss bank come in and buy and sell the Swiss franc. But again, there's a very near-term events. Remember that number, $4 trillion crossing on the global markets now every day. There's so much more firepower out there than is available in the central banks of the world. The central banks just can't compete with the market. So intervention, given that the markets continue to grow, currency markets, because of globalization, any intervention by the central banks of the world is really going to have a small short-term impact. This is why Japan talked about having something coordinated with the other central banks in the world. They know that, even trying to do it themselves isn't going to be much, and any chance of success, even any near-term basis, is going to have to be a coordinated intervention with the U.S. and ECB coming in to support them. Intervention is usually most effective when the trend has already changed, and this was the Robert Rubin rule. In the currency markets, it's known as the Rubin rule. You wait for currency trends start to change on some global macro flows, or just some evidence that it's changed, that sentiment is washed out and the trend started the other way. Then you intervene to help that trend and kind of supercharge that trend. Robert Rubin was good at that, and he kind of coined that rule. Despite what I think of Rubin in a lot of different ways, he was a very good trader and kind of coined that. So we don't think we'll see the Bank of Japan intervene in here to try and catch this falling knife, so to speak, until the trend starts to change. And if it changes, as we said, on the bond market standpoint, the intervention, I think, will tend to just support the existing rally in dollar yen, or fall in Japanese yen against the U.S. dollar. Question here, we do a lot of Elliott wave, and are we starting a third wave down in the euro against the U.S. dollar? Those of you that don't know Elliott wave, this may sound very esoteric, and of course Elliott wave is esoteric. It's 5 waves, one up, 2 down, correcting, 3 up, 4 down, correcting, and 5 up the last wave. Wave 3 tends to be the most powerful wave because it really represents the public coming in and joining the trend, which makes sense from a human action standpoint in markets, and I think that's why Elliott wave makes a lot of sense. We happen to think we happen to agree that we think we started the third wave down here, again at different levels, but a strong third wave down in the euro, and we think it carries to par. That's our view on the euro. Here, so yes, we do happen to agree with that. And again, if you'd like to send an email to blackswantrading.com, and somebody had indicated that I made a mistake on the slides. Let me see here. Get to that. Yep, blackswantrading.com. If you send an email to us at info@blackswantrading.com, be happy to send you our daily wave chart on the euro if you think it would be helpful, and any other information that we've shared here, be happy to share with you. I think that's it on the questions. I thank you very much, everybody. I appreciate your time and staying with this rather long presentation that I said was going to be short. So Steve, over to you if you're there. Have we lost Steve? Well, thank you, everybody. On behalf of Steve, in case I can't hear him, I appreciate it. And you all have a good night. Take care.
Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.